Hello and welcome to the next edition of Trades and Tutorials. This is Jeff Fish, president of MarketGauge.com. Now, in this video, I am going to look at a key price point that becomes incredibly powerful when the markets get volatile. So right now you're looking at the SPY's daily chart. Not that you really need to see the chart. I'm sure you're well aware that in the last couple days, the market has been extremely volatile. Well, there is a price point, an inflection point that you can calculate at the end of every day that will tell you whether you should be bullish or bearish above or below this price point. Now, for those of you who know Market Gauge, you're probably thinking that I'm talking about the opening range. Now, I will talk about the opening range, but this makes the opening range even more powerful, and it's not the focus of this video. Before I get into it though, let me just make sure that if you just found us on YouTube, please subscribe and like this video. If you just found us on YouTube or Facebook, please like this video. And of course, you can find more videos like this at marketgauge.com/tutorials. You can also receive trade ideas and a whole lot of other information if you follow us on Twitter at both our handles, at MarketGauge and at MarketMinute. And finally, if you're not already watching this in HD, all you have to do is change your settings in the lower right-hand corner. It'll be a lot clearer. I think you'll like it. All right, so let's talk about the floor trader pivot. So the floor trader pivot is a simple calculation that tells you whether the bulls are basically happy or the bears are happy based on the prior day's action. And it's as simple as taking the high, the low, and the close of the prior day, averaging them, and that's your number. Now, if you want more information, you want the actual formula, just go to marketgauge.com and go to the blog and free tools area, and you'll find it in the glossary. For now, I'm just going to show you how it works and how powerful it's been over the last couple days with all this volatility. So I'm going to show you on the SPYs, and then we'll apply it to the other indexes as well. So clearly there's been a lot of volatility, and if you're familiar with the floor trader pivot already, and you're saying, Jeff, I already know this, then take away from this video that everything you know about the floor trader pivot and how powerful it is even more powerful when volatility increases. In fact, just yesterday, when we get big volatile days like this, when the market opens lower, I know that there are 2 points that the market needs to get through for me to start looking to buy that low aggressively. First is you want to get it through the prior day's low. It's not always an issue. Second is you want to see it get through the floor trader pivot. Get through those 2 things and the opening range, and you got an opportunity to catch a big day like this, not just in the SPY, but in any market, any stock. And remember, when the markets get really volatile, most people pull back, even though many people like me will be telling you lots of volatility equals lots of opportunity. Well, this is one way that that is true. So let's get into the details. You can see the daily chart here. You can see it's really volatile. Let's take a look at the intraday chart on a 5-minute basis and see this floor trader pivot in action. All right, so we'll get to the VIX in a second because it works there too. Let's just take a look at, I'm going to start with the Qs. I'm going to start with the Qs over here on the right-hand side of my screen. And the reason being that the Qs, if you look at them on the daily chart, just came down to their 50-day moving average. In fact, let me go back and reinforce that. So there are the SPYs. Here are the Qs. So on Friday, the Qs came down and just barely broke their 50-day moving average. SPYs, on the other hand, crushed the blue line, which is the 50-day moving average. And in the meantime, this is the VIX. So in case you're wondering if this works on the VIX too, and you would have liked to have caught the VIX as it was breaking out here, or caught the VIX again today, I'm going to show you how to do that again with the floor trader pivot. Now, IWM also didn't break its 50-day moving average. So with the Qs and IWM, that was 2 good reasons to think if the market doesn't follow through to the downside, maybe it'd go back up. Well, when you're going to look to be confident that it may actually be going back up, as I said earlier, back above the prior day's low and then back above the pivot. Let's see how that works when we look at the intraday price action. So if we look at the Qs, the black line on my chart is the floor trader pivot. So again, you calculate it based on the prior day's action, and then the next day is where you draw the line. So yesterday, the floor trader pivot was around 115. Right? Today, the floor trader's pivot was about 115.50. Now, if I go look at these same levels on the SPYs, here's yesterday, here's today. Now, let's take a look at it on the VIX. Here's yesterday, here's today. So at its simplest use, and we use the floor trader pivot in many different ways and patterns, and we get into that more in our slingshot setups course or in our AM trader course. But for right now, I just want you to be focused on the most powerful time and the easiest way to use it, and that is in volatile markets. Above the floor trader pivot, you can have a bullish bias. Below the floor trader pivot, bearish bias. So what does that mean for, let's say, yesterday? Friday, as you can see, the end of it was a big down day in the SPYs. It was a huge up day in the VIX, and in the Qs, of course, big down day. Then we come into yesterday. Yesterday opens lower in the SPYs. This green line here is the 30-minute opening range, and you can see that breakout of the 30-minute opening range, retrace to the opening range, makes total sense, and then hits its head on the floor trader pivot. Now, at the same time, the Qs also moved lower initially, but then came back up, broke out of its opening range, first indication of a bullish day perhaps, but under the floor trader pivot. So what you want to look for is a bullish opening range, higher than the opening range, and a bullish pivot situation, higher than the floor trader pivot. And here's why. You can see in both the case of the SPYs, it stops there, and the Qs. Now the Qs were running ahead. In other words, the Qs got to their floor trader pivot way before the SPYs did, and that's why I focused on the Qs. So when the Qs broke out above their floor trader pivot, now they were above their opening range, above the prior day's low, and now above the pivot. That means that they really should go higher. They really shouldn't come back down and shouldn't come back down into their opening range. All right, so if you were trading, you could have been a buyer through the floor trader pivot and with a tight stop under the opening range high and caught this big move. Now, the reason you would have been more confident about doing that yesterday would be because the SPYs were moving up at the same time and the VIX was trying to get through its floor trader pivot too. All right, so look at how the SPYs not only break out, but when they retrace, like I said, it shouldn't come back down through. When they came back, held that same floor trader pivot and moved higher. At the same time, VIX breaks down, and that gives you more confidence that this breakout is going to be a good one. All the while, if you had been in on the leader, the Qs, those pullbacks were just slight pullbacks on a big day. Now, if you're a day trader, this is great. You're out at the end of the day. If you're a swing trader, you've got a good position or you've gotten in at a good start. Such a good start that when the market gaps down today, again, let's take a look at how it reacted to the floor trader pivots. So it came down to the floor trader pivots and consolidated around or right under the floor trader pivot while it was establishing its first 30-minute opening range. Now, at the same time that the Qs were kind of hanging around their pivot, trying to decide whether they're going to hold it or break it, the SPYs were already under it. The SPYs never traded over their floor trader pivot today, so that was a negative. At the same time, the VIX opened above its floor trader pivot. So if you see the SPYs gapping below an important floor trader pivot, and the VIX gapping above their floor trader pivot, and the Qs sitting on the floor trader pivot, as soon as they all start to continue in their respective directions, down in this case with the Qs, down in the SPYs, then you know that this has the potential to be a down day, which is exactly what it's been. And once again, when the breakdown below the pivot happens and it comes back up to the pivot, it really shouldn't go back through. If it does, that could be a true change in the day's trend. Didn't happen, back down again. VIX never even looked back. Here's the opening range breakout. Again, from a trade perspective, a breakout just around 39.50. We're up over 42 today. So big move in the VIX. Slight down move, but definitely don't want to be on the wrong side of that in the Qs. And another pretty substantial down move in the SPYs. So if you want to be on the right side of the market in volatile markets, make sure you know where this floor trader pivot is. It's not complicated and it's incredibly powerful. It's really easy to get frustrated with the floor trader pivot if you're not really good at it in normal market conditions, right? You do need to know how to use it in normal market conditions, and there's a little bit more to it than what I'm showing you here. But when the markets get volatile, make sure you know which side of the floor trader pivot you're on. All right, I hope that helps, and I'll see you in the next video.